Hi guys, I'm Manu and welcome to another episode of Sweet Money. I'm a CPA, Canada, US, and I have my own cool little accounting firm, better known as Shandel CPA. Today I have a wonderful guest. There's certain people that you can introduce because they have this resume and these accomplishments, but this individual, I could not do justice to his introduction. Therefore, instead of introducing him, we're just going to jump into it. And then throughout this interview or conversation, you'll realize why it wasn't possible for me to do justice to an introduction. So let's get started. I present to you Mr. Mark Borkowski.
Manu, thank you for inviting me. Let's talk M&A.
Whatever you want. It's your show.
Well, my career started in sales, in technology, Hewlett-Packard. I left, and my partners and I started a technology company. We parted company not on very good terms, and so I left and wanted to buy a business, but I didn't. But I put two clients together. So I've been selling private mid-market businesses for 37 years, effective February 16th. The reality of our market is there's an incredulous amount of money looking for very, very few good projects, very few good deals. That's the reality. In 2019, to give you an example, the Private Equity and Venture Capital Association makes a declaration. They say there's $1.1 trillion of what they call dry powder. Wow. $1.1 trillion. All the M&A, the private equity firms are ecstatic. The pension funds, insurance funds have released $1.1 trillion to invest through private equity, through family offices, a lot of money available. Wow. 2019. Last year, guess what happens? COVID came, COVID went. You paid your pension fees, you paid your insurance fees. In August of last year, our association declares it's $3.2 trillion of dry powder. An incredulous amount of money. 4,000 private equity firms in North America who at least manage $500 million of captive capital, 24% of them had to give their money back to the pension funds, insurance funds, and endowments. Do you know why? They can't put it out. Everyone is looking today for private businesses. The very best returns are coming through private equity, through family offices. I mean, there are great returns in real estate. There are great returns in the public markets. There's no greater place to be right now than private equity. All the major pension funds, insurance funds, all the endowments have appropriated more money towards private equity. Private equity acquire businesses. At the moment, about 34% of all U.S. companies are owned by private equity. In other words, institutional capital.
So if you were to sell someone's business, the chances are the buyer will be a private equity firm?
The buyer will be a private equity firm today if they're doing probably more than $2 million, maybe $1 million even. $2 million of what we refer to as EBITDA, earnings before interest, taxes, and amortization. It used to be 6 years ago, they would look at anything that didn't do $5 million of EBITDA. Then it dropped to 4, 3, it's 2, and there are private equity firms throughout the world, throughout North America, certainly in Canada, that would look at a company that does at least $1 million of EBITDA.
So then you're saying a common person who has a bit of money, they should start their own as opposed to buying a company?
First of all, let me give you an idea. So in the market today, for any size of business, there are a lot of individual buyers who knock on our door. In Toronto alone, last year, and probably the year before, I've accumulated about 619 what we call search funders. These are ex-bankers, ex-entrepreneurs, university graduates. All the professors at the main big Ivy schools say, go out and find a deal. Somebody will finance it. You know what? Not really. So 619 search funders knocking on the door saying, show me a deal that's doing $2 million of EBITDA. No. There's another category of buyer referred to as the independent sponsor. Independent sponsors say, I've got a backer. I've got an institutional backer. I'm a prominent guy. My response is, okay, who is your backer? Provide me something in writing as to who this backer is. And even the independent sponsors are not the best qualified buyers. there is something called the pledge funds. Now, these are guys that are organized, have come together, 2, 3, 4 of them, that now will see a deal, and they will immediately, within short order, make an offer. And they'll tie the company up for 3 months. During that time, they're out trying to raise money. Tough to deal with those guys, but there are a lot of pledge funds. I refer to that whole community, and it's a terminology attributed to me, the LBO dreamer, leverage buyout dreamers. So below $1 million is the Wild West. That's where you're not dealing with institutions, you're dealing with strategic buyers who may be in the water business. They've acquired another water business or whatever.
Right. A plumber buying another plumber.
A plumber buying another plumber.
Got it.
And so that industry is consolidating in all sectors. It started with the veterinary market. Okay. The gentleman who worked with me was part of the EY team that did the back office work, and they made 106 acquisitions in 24 months. So veterinary practices are not large. So there's consolidation going on at the lower level.
So let me take a step back here, because you just threw the whole fire hose at me. Now, do you deal with the buyers, sellers, or both?
I exclusively do one thing: strictly sell-side M&A. There are two types of M&A people. Originally, 5, 6, 7 years ago, when there was much more deal flow, everybody was a sell-side. Most of them sell-side M&A people. Because there's a scarcity of deals, these people have gone to buy-side. They get retained by a private equity firm or a family office or a strategic, so they get some income, and they go out chasing, looking for a deal. Good luck.
Now, what I find very interesting is because back in economics, we learned that the baby boomers will buy their homes, and then they downsize, and the next generation will buy the homes. And I guess that same concept, economic theory, should have applied to businesses. So I would imagine right now, as the baby boomers looking to exit, we should be seeing a flood of businesses coming into sale. Is that what you're seeing?
No. I mean, there's been 4 or 5 books published indicating that trend would be going forward. I'm dealing with people who are in their 80s. I'm dealing with a guy who's 92 years of age that's not ready to sell.
And why is that?
I don't know. I mean, they're not selling. I've chased businesses, some businesses that I really would love to work with for 11, 12 years. Solid businesses run by people who are in their 80s, not ready to give up. So this theory that the baby boomers, many of the baby boomers have sold. But there's not a lot of them. How many Canadian businesses do $2 million, even $1 million of EBITDA? Not many.
Now, outside of economic theories and whatever, do you think it could be a concept of the fear of being lonely? And this kind of gives them some relevance in society?
A lot of these people have no other interest other than their business.
Exactly.
I mean, they do nothing but
work.
I mean, my grandfather worked 80 or 85 hours a day. He was an entrepreneur.
That's all they knew.
That's all he knew. They many have hobbies, but for the most part, they are totally ensconced in their business. And some take a step back, but for the most part, there has to be a reason for somebody to sell their business.
Right.
They're either fighting with a partner. I help create that fight to force a deal. There might be some domestic issues. Usually it's illness, where finally Harry's been sick and he really can't carry on anymore. Off we go.
Off we go, right. Now, because of this high interest rate, how hard is it to get financing? How challenging is it?
It's not that difficult.
Private equity firms have money.
Private equity firms use their own money. So
exactly.
For call it strategics, competitors,
right.
Companies in the same business. So one camera company buying a camera stand company.
Or a plumber buying a plumber.
A plumber buying a plumber.
Right. How hard would that be?
Not difficult. Not difficult. If they're in the industry and it's a strategic, they have a bank relationship. The banks at the moment are willing to lend. And let me tell you something. God bless BDC, because BDC finance a lot of these acquisitions, and BDC will bend over backwards to help entrepreneurs grow and make acquisitions. Let me tip my hat as well to Roynat. Our friends at Roynat, part of the Bank of Nova Scotia. Very aggressive lenders. They're out there. They support management buyouts. They support expansion, real estate. They will support an entrepreneur trying to buy a business, but within reason. Technically, look, anybody coming to the table that doesn't have money, substantial money to put down, we discount very quickly if they're an individual and it's a smaller deal. The Roynats and all the banks will provide, certainly BDC, a cash flow loan. It's not equity, but it's a cash flow loan. It's based on cash flow because there may not be a lot of assets in the business. So if there's some inventory, they'll come up with a formula. But for the most part, there is financing available. There's too much money in the system at the moment. So the lenders are available to do deals.
So let's take a step back. Now you deal with the sellers.
I deal
so
with the
a
sellers.
seller calls you and
Or
says,
I find a seller, yes.
and says, Mr. Borkowski, I want to sell this business. And then what do you do? Like, so what's your next step?
I'm glad you asked that because now we're going to lead into the real discussion. It starts with an NDA, a non-disclosure agreement. So I've now met. We do a non-disclosure agreement, and I then do something that many don't want to do because it's work. Many want to charge for it. I will spend 3 to 4, 5 hours doing a valuation. No cost, no obligation. I want to meet owners. So over the course of 4 or 5 hours, we will sit. They will not give me the financial statements until we arrive. I invite their family. Usually they bring their accountant. They'll bring partners. We will sit in a room for 4 hours. They'll bring out their financial statements. And then I do something that somebody recently called a magic show. I will work through those financial statements and ask a lot of very invasive questions. The objective is to find out what the real net income of the business is. And you know what? Most owners don't know because most owners have a lot of other expenses. They have 7 cars. They have a boat, all running through the company. And when you do the add backs and the take backs, because some owners don't take any salary. So then you say, well, wait a minute, if you sell the business, whoever's going to step into the business, we've got to put a component in there for them to run the business. So we do a valuation. I then slide the financial statements back. I keep my notes, and then I express an opinion based on value, the way I see it. So we've done the valuation, but that's not it. It's not about the valuation. It's about what kind of deal is going to be struck. I mean, all cash deals are rare, but we had one recently in December in the HVAC industry with a very prominent individual. We did one in March, all cash, because there's a lot of money in the system. So I explain who the potential buyers are, what structures of deal, all the information, and I've now expressed a valuation.
Now, do you have a team that does all this in the background?
I do it myself initially.
Okay.
I mean, I will bring.
I mean, the valuator and
We don't need a valuator. I mean, to bring in a valuator, you're looking at $7,000 to $10,000 to do a valuation that I've done for free. I asked them at that point, go and get another opinion from a learned individual that does what I do. Go and speak to 2 or 3 people, because most of these people don't believe the value that I put on the table. At some point, even before I get into the options, some people ask me to leave the room and leave the office. I was escorted out recently by somebody who had a valuation that was way out of line, but I put all the cards on the table. I take my notes. So I've given them all the different options. Now I give them time to reflect. And I go back, we meet again, we talk, and then they say, where are we going to sell the business? Well, unlike the many, many, many people that claim they're in the M&A business, we buy data. So we buy data from the data providers.
Can you explain that?
Yeah, we used to use PitchBook. PitchBook is not very good. There are a number of other new platforms like Inven, SourceScrub, Preqin, S&P Data, ZoomInfo. They're expensive, but through those databases, if I'm selling a bottle cap of some beverage, I can find every bottle cap company in the world, and I can find every related company to bottle caps in the world. I will then, through our database, scrub the database, and these databases provide us the names of all the senior executives, profiles of the company, and their email contact. In the old days, we used to send hard letters. Today, it's an email. So now, I'm coming to the owner, seller, and saying, I've sourced 518 companies. 518 companies that fit the criteria. Let's go through the list, because some of these companies might be your competitors. Some of these companies you may have sold to or supplied from. Let's have a look at the list. So we go through the list. We've taken out 15, 18, 20, 30 names. I then counsel them, if we're going to start this process, do not tell your employees. I mean, if you have to, you have to. There's always somebody within the organization, maybe your accountant, your chief financial officer, your partners, your family, it's okay. But don't tell employees, because employees get spooked. So that's essential that we counsel them on the whole process of how it's going to work. So now I've identified this group of people. Now what's the next step? They have to retain us, because we're going to put a book together, a confidential information memorandum. You know what? Today, I'm working with students. So at any given time, we'll have 4 students, co-op students. They're brilliant. They do as good work as any accountant or any other professional to help put the SIM together. What does a SIM contain? Organization chart, company history, lots of photographs, all the data, and the financial information, not financial statements, spreadsheets. Spreadsheet of the performance over the last 5 years, a forecast, and a budget. So now you've got a beefy package of 30, 40, 50 pages, maybe more, all the information contained in the SIM, Confidential Information Memorandum. Now, that SIM we take and we reduce it into one page called a teaser. No names, a generic description of this company, some financial information, generic description, one page, nicely laid out. 516 names, bam! Out goes the teaser, and it is a flurry of activity. 516 letters went out with the teaser.
Because you have the contact information.
We have the contact information. We're not waiting for people to call us, or, any broker that approaches an owner and says, I know a buyer. I know 100 buyers. Not the right buyer necessarily. Maybe not. 516. Now, you better be at your desk for the next number of days, because the flurry comes in.
Right.
Not as many as you think. In comes a flurry. 516. Suddenly, 75, 76 responses come back. Now, owner better be available, seller better be available, because we go through the 76 and we go into great detail to study more than a website. Who are these groups? Who do we want to send a non-disclosure agreement to? Who do we want to send the confidential information to?
It's like a pecking order.
It's a pecking order. So let's send it to these first 30, because they're the premium players. 31 NDAs go out.
Okay, let's pause here for a second. So you walk in, so someone calls you, you walk into the company, you get the financials, you get the information that you need.
Yes.
You've built your deck. Now, are you asking for financial statements that have been reviewed, or will you just take what their accountant gives you? Like what?
Well, you don't have a lot of choices. I mean, we're not going to work with internal. We work with financial statements that have been prepared by an accountant. And generally speaking, everybody loves the audited statements. Larger companies have an audit. Today, an audit is expensive. You have to have a reason to have an audit.
Because $1 million, $2 million EBITDA company won't have an audit.
Very unlikely.
Right?
But they might have a review engagement,
Right.
which is the next level down. Yes. So an accountant's comments, we can contact, but we're in touch with the accountant. So we've got accountant's comments. We'll come to lawyer later, and many will have a notice to reader. But in the valuation, I am digging very invasively to find out what the real story is, what the real numbers are. So we have the numbers.
Right.
We put them into a spreadsheet. So let's go back to the process. 31 NDAs go out. Bam! Out goes the SIM. 31 have got the SIM. Now, first thing that happens is we get a flood of questions. these are people that know the business or related to the business. They ask a lot of very good questions. The early starters might have questions within the first day or 2 or 3. So now I'm back to the owner. I'm back to their accountant. I'm back to our resources and saying, let's answer these questions. We have to respond. So now we've answered 11 questions. Guess what I do? We send the 11 questions. I take those 11 questions and I call the other 30 or 29 and say, I had a conversation with Mr. Owner, and here's 11 things that we talked about. I give these buyers as much information as possible. So now more questions come in. So everyone is somebody referred to this as frequently asked questions. They post it on a data room. Right. I don't. Right. I let everybody have as much information as possible. Okay. Now, in the old days, people would visit. They still do. But if you're talking to somebody in France, Germany, or in Atlanta, or in Edmonton, guess what? We do Zoom. So we'll do a Zoom. Many owners aren't very comfortable. We set up the Zoom call. It's an hour or longer. We introduce the company, our company. They introduce themselves. And now there's a comfort level relative to what this business is all about. Early stage. A lot more questions come back. So it's constant flow of information back and forth. So we're communicating with all these groups. Guess what happens? The 31, 16, 17 of them don't really see the perfect fit. They don't like the owner, the owner's objectives. And by the way, I don't take on a mandate unless I'm on the same wavelength with the owner. I mean, a lot of the amateurs.
So what's a red flag for you?
What, sorry?
A red flag.
Well, red flag is that the owner doesn't want to stay. He wants to leave right away. So
would health issues be a concern?
Health issues are usually a concern. Look, you've got to have a reason to sell a profitable business.
It's because you said earlier that people in their 80s are holding on to their business.
They are.
And they're not leaving until Harry gets sick.
Harry gets sick.
So you would walk away from that deal?
Well, no. Okay. Harry's going to be around. Harry's not going anywhere. Even if he's sick, he'll come in on his hands and knees. This is his company. Right. Honest to God. But again, there's other buyers in their 60s and 50s. People have to have a reason to sell.
Right.
So now, 17 have dropped off. Now, we're communicating with these people. Maybe they've made a visit, maybe not, and letters of intent start to come in. Letters of intent are always, this non-binding letter of intent spells out all the terms and conditions of the deal, the way they want to see the deal. There's always a difference between our expectations and their expectations. So now I'm jumping into these discussions. I will always have the owner involved. And some of these people aren't very sophisticated. They haven't done this before. So now we are negotiating all these letters of intent. So of the 17 that dropped off, suddenly now those that are prepared to do something within short order, we might get 4 or 5, maybe 6 letters of intent. Right off the bat, for all this goodwill and all this time we've spent with these people, some of them come in with ridiculous proposals, as you can expect. Happens in real estate, happens with people going in to buy a new car where people insult you. So you basically say, we're not on the same wavelength, this is our deal, throw it out. Some come back, the majority of them that are highly leveraged or don't want to use any of their money or want the vendor to provide great deals of financing, or they're building in a huge earnout. Earnout is, if we make it, you make it. There's 3 ways to do an earnout. This is something most people don't know. The majority of people say...
Can you please walk us through the earnout model?
Absolutely. Yeah. This is important. Yeah. This is important. So an earnout is based on a performance. So they're
KPIs.
Yes. So okay. they'll say, all right, we will share... You've got to share the risk with us. You had 3 great years, and this year's a little bit mediocre. Maybe that's why you're selling. Tell you what, you're telling us that the forecast next year is going to exceed your very best year. Let's share the risk. Buyer, seller, let's share the risk. An earnout. So how are earnouts done? Earnouts are done on a percentage of bottom line, percentage of EBITDA. You know why? Many deals have been done that way. Not me. If there's an earnout, it won't be based on bottom line. You know why? The buyer, the new owner, can load the company up with a ton of expenses.
I was going to say that accounting is, you can show a profit or a loss with one journal entry.
Exactly.
Right?
One journal. So, and there's lawyers in town here, brilliant lawyers that have recommended their clients to take the earnout on the bottom line because there's no floor, no ceiling. We won't guarantee, but wow, you're predicting this fantastic year. You're going to make a lot more money. No. You can do now another very elegant approach to take a portion of gross margin. So our gross margin's 38%. So you take a percentage of gross margin, and that's your part of the earnout. Guess what? Very elegant, very attractive, very difficult to do from an accounting perspective. So the earnouts that I structure are based on a royalty, based on revenue, percentage of revenue. So my
for 3 years.
For 1 year, 2 years, 3 years, usually doesn't go beyond 3 years.
Because multiples, like usually, because when you buy a company, it's a multiple of EBITDA.
Multiple of EBITDA is the vast majority of transactions.
Then, let's say if it's let's just example, it's a multiple of EBITDA 5 times, right? Now, because revenue is higher than EBITDA, you might go, okay, 2 times, which might be 2 years.
All the above. All of the above. There's so many ways to structure deals that it's ridiculous. But let's go back to the earnout. So now they get a portion of revenue. So revenue went up. Revenue didn't go up. So revenue went up, so they get a portion of the revenue. We don't care what the buyer's gross margin is. We don't care whether the buyer's making or losing money, what their expenses are. We get a monthly report. What was the revenue this month? Our accountant has an opportunity to audit that. We're now
your accountant on your
our buyer, our seller's accountant, and
okay.
me will study that portion of the earnout over the period of time. I'm a little different. I get paid when the owner gets paid. If he's got a vendor take-back note, most people say, I want all my money up front. Because you know what? About 50% of all transactions within the first year, first 2 years, there's a dispute. Something went wrong. And Harry doesn't know what to do. So...
Plus he's sick.
And Harry's not well. And Harry's not well. And his wife is calling, and his kids are worried. But I'm reaching out to Harry.
His 30-year-old wife is ready to leave.
Well, not really. I mean, remember these guys are solid citizens. So now we have a dispute. What's the first thing people do? Call your lawyer. Now nobody gets paid. Now we've got bad will. You know what happens? Mark jumps into the fray. He knows the buyer. Knows the seller really well. Mark jumps into the fray and says, guys, let's work this out. So we get a resolution 90% of the time. We don't want it to go to the lawyers because the lawyers will ruin everything. So we've now resolved it. And if there is an earnout, Harry's been paid out. I get my portion of the fee. Some people have actually cheated me, and it goes on everywhere, of course. But I stick around from beginning to the end. So all the people that work with me, I micromanage. I'm involved in every step of the way. If you step away, it falls apart. So many of the big accounting firms where the partner's involved in the beginning and then turns it over to juniors, it always seems to, not always, a lot of cases it fails.
Right. Yeah. It's funny that you say that. Junior accountants just don't have the insight that a senior would have, right?
Exactly.
And experience, like we discount experience, but we shouldn't. And this generation does that, which is a shame.
It's unfortunate. Yeah. So I get to know these people very well. But business owners are tough guys, tough women. They have to be. Everybody wants a piece of them. So you have to be able to stand up to them and tell them to go to hell and have fights short of physical, which I had with one of my partners years and years and years ago. You've got to be able to stand up to them. You've got to be able to tell them the truth.
Right.
But I don't want to take on a project because I've got a graveyard of hundreds of companies where I say to the owner, it's worth X. And he says, no, we want 2X. Good luck. Stay in touch. I'll be in touch once a year, once every 6 months, just going through the process. Many companies don't sell because the owners can't deal with the fact that their business is not worth what it is.
So if you take all your deals, you take the median, how long does it take from the owner calling you to closing the deal? Like,
that's a great question.
What's the runway?
I'm so glad you've asked that because honestly, It's a year.
Okay.
It's a year. It's not like a real estate deal that happens very quickly. Listen, our buyers have given us a letter of intent. We've negotiated, we accepted the letter of intent. Now we're going to get into a definitive agreement. A definitive agreement is the agreement, but there's due diligence. And due diligence alone, where they're doing all the investigation, takes usually 8 weeks to 12 weeks. Some go longer because our client may not be able to provide all that information easily. They want a lot of financial data. They want lots of data. Some of the information you can't give them until the very end. And the very end is who are the customers, although in many cases we disclose that through the process. Now they want to know who the employees are and meet the employees. You can't meet the employees until we know there's been some definitive point. In the years past, it used to be a deposit.
I was going to say that, yeah, it's right.
People don't want to put up a deposit because it could be easily lost, because Harry might change his mind at the last minute, which they do.
And you can't put a clause in the contract saying if you change your mind, deposit comes back?
Yes and no, and you can fight over that. So it's best to waive this deposit issue because it stalls the process.
Got it.
You're negotiating a deposit. So I'm saying, look, Harry, we've developed some pretty goodwill with these people. We got to know them. They got to know you. We know them. We're going down the path together. But if we can't provide the information, it's going to stall the due diligence. So in many cases, I have to drag in their accountant. I will bring in one of my associates who works with me, gather this information. Now we've got all the information. Now we're ready to close. But now I want to talk about the lawyer. All right? I don't want to offend a client that knows this story, but I insist on meeting the lawyer wherever he is. And I have about 12 questions I ask.
From the seller side?
From the seller side. His lawyer. And you know what? Most of these sellers have a lawyer that's a fat real estate lawyer because they bought real estate. I mean, a lawyer that's been doing commercial work, a lawyer that's never really understood a sale of a business. And there's two ways to sell. A share sale, which I usually insist on, and I'll tell you why.
I'll tell you why as well.
Yeah, you'll tell. Well, you know, because I attended one of your events where you explained it in simple terms. In a share sale, the first now $1 million is taxed technically.
1.25.
1.25.
It went up.
It's about to go up. Not yet.
In 25, it went up. So it was
March 1st.
Yeah,
March 1st.
Yeah,
okay, so it's
sure,
one. Yeah,
sure.
So
by the time the video goes out,
by the time this gets out, it'll be 1.25. So let's say that there's 2 partners, 3 partners. We've done a share sale. Why have we done a share sale? They have to take over the employees. With the exception, if they don't want an employee, then it's a responsibility for us to sever that employee. They have to leave working capital under a share sale. So they're getting the benefit of this potential tax-free deal or portion of it. And now they're taking over the employees and they're taking over certain obligations. You're not changing contracts. We have a share sale. People are worried about contingent liability. Well, you sold something in 2022 that was contentious, and maybe that's going to come back. So there's all kinds of clauses in the agreement. So now I've entered the lawyer, and he's only been able to answer 5 of the 10 questions. I now look to the client and say, I don't think that's the guy. That creates a lot of tension. Many of these people have worked with this lawyer for 40 years, the fat real estate lawyer. He's done real estate. He has never done a share transaction. So I will say, look, why don't we go out and interview 3 or 4 really good lawyers? And you know what? I am recommending people who are out of law school for 4 or 5 years. Not the senior partners that are expensive. These are ninjas. These are kids where you send them an email at 6 o'clock in the morning and at 6:45 you've got an answer. 11 o'clock at night, you're calling, they're there. Ninjas, smart. And there's some really smart kids. And they're kids. They're in their 20s, 30s. Brilliant. But yes, there are all levels of going to higher levels of lawyers. And I've always in the past worked with the Bay Street firms, but there are a lot of these younger guys with smaller firms and boutiques. So we interview 3 or 4 of them.
So for those of you watching, Bay Street in Toronto is equivalent to Wall Street in New York.
Correct.
Right?
So we've got
just to give our Canadians.
It's a Canadian picture if you're an American listening in here. Yeah. So the big Bay Street law firms that may have 400 or 500 lawyers, I know I've I know more lawyers. There are more lawyers in Toronto than cats and dogs. So there are a lot of and so
I
many
struggle to find them. You got to introduce me to some of them.
I'm going to introduce you to some of them. I mean, there are many, many lawyers that claim to do M&A. How many M&A deals are done in the city of Toronto or in Canada at any given time? It's reported. Those that are reported, many are not reported because they're private transactions. The point is, I've worked with some of these ninjas. They deserve the file, but they have to sort of appeal to the owner. In many cases, the owner will consult with his lawyer, so this sometimes creates a bit of tension. But the objective is to hire a technician because these purchase and sale agreements are very tricky. I mean, I read them every day. I mean, I read nothing else except purchase and sale agreements and letters of intent and marking them up. So now you've got this definitive agreement. It's been negotiated. They've completed the due diligence. They've met the employees. Bingo. Buyer says, you know what, I don't think we'll get along with this one guy. And the owner says he's been a problem. So they say, okay, tell you what, this is the new glitch in these deals. They say, we'll take him on, but if we terminate him within the first year, Mr. Owner, you owe him severance. It's a compromise. Bingo, deal closes. Harry usually stays on for a transition. We've negotiated a compensation package. Harry will stay usually for a year. But today, the private equity firms say, wait a minute, why don't you keep 10% of your company? 15. Why don't you bring in your general manager and let's sell him 5%? Because he's important. So now Harry's kept 10%. He's stayed for a year. He's trained the next generation. In many cases, these people have professional management. The general manager becomes the president. Or if it's a private equity firm, they hire an executive recruiter, and they bring somebody up from Chicago, Boston, maybe in Toronto, and they bring in a new general manager, a new president. Harry is training him. Harry's earnout in the first year is guaranteed because Harry has continued to drive the business. However, as a 10% shareholder, Harry has a vested interest. Maybe we've tied in his general manager who now has a senior role or some kind of a senior role. We've brought Harry into this equation, and Harry will have 10%, and they'll call on Harry to participate in phone calls, in Zooms, go to conferences. Harry is still involved. That gives the customers a lot of comfort because as soon as Harry leaves, a lot of these long-term relationships that he's had with Joe,
go out the window.
You got it. Yeah. So Harry now keeps 10% of the business. Maybe we've sold some equity to a smaller shareholder. We're calling on Harry.
It's also optics from a PR point of view, right?
Exactly. Yeah. So it's a good fit. And at a certain point, Harry has the opportunity to sell his 10% back to the company, and there's a buy-sell agreement. And I'll be a part of that. So it works out very well.
Now, let me ask you this, Mark. You said you only represent the seller side.
Yes.
Now, what if the buyer brings in their own broker?
They'll usually have a broker. Maybe they'll negotiate the deal themselves if they're skilled. So now I'm dealing with the broker.
Okay.
And it's difficult. And by the way, I want to let you know that I've done buy-side projects. I've done a number of them.
Okay.
They're very difficult.
Your preference.
My preference is to do sell-side. I'm working with my client. I know his objectives. I know his business.
Right.
I've really got to know the business. I've got to know the individual.
And quite frankly, Mark, right now what I'm seeing, even in the accounting world, everyone's niching, right? And that's your niche. Like you've niched, and that's all I do. Want. Yeah.
I mean, I love manufacturing. That's
right.
by far my biggest preference. But we've worked with every type of company imaginable.
So industry is not
industry agnostic. Industry agnostic. I've never been involved in the mining industry. I don't understand mining, although it's a big part of the Canadian economy. I don't do real estate, although sometimes the real estate is acquired with the business. Right. But rarely. You know what? Most of these buyers get returns on equity of 25 to 30%. You don't get that owning real estate. You got a cap rate, it's steady income, captive capital. But
so what you're saying is if the buyer buys the shares and the building sits in a holdco, the holdco won't go in the deal.
We have to do a consolidation. Most of these owners, and by the way, we missed an important step. So most of these owners have a holding company. So they're taking dividends, profit going up into their
I
holding
use
company.
slang. Yeah, holdco is holding company. Thank
Holding
you.
company, yeah.
Yeah, so I was using
holdco.
slang
Yeah,
here.
no, it's not slang. It's there's a holdco conference. They don't call it holding conference. So it goes up into his holding company. We have to clean that up. That's his cash. So if they bought shares, part of the deal is usually you have to leave sufficient working capital so that the buyer is not putting in new money to run the business. So that's negotiated along the way. So there we are. We've now sold a company. Harry's stuck around for a year. Good transition. Very rarely, if these deals have been well thought out with the right buyer, these deals fail. Very rarely. But there is failure.
Right.
Buyers come in and they don't manage the business like Harry did, and circumstances fail.
Right.
They lever the company up. They take on a lot of debt. Harry didn't have any debt. They've loaded it up with debt, or there's some kind of misunderstanding with their customers or the suppliers. But for the most part, if Harry's around for a year, he's introduced them to all the customers, all the suppliers. He's given them comfort.
Okay.
That's going to be a good deal.
So, when people get married, you always hear about people having cold feet. So
Yes.
right before they step on the altar, they disappear.
Yes.
Now, your baby, this company of yours, you've had it for 20, 30, 40 years.
Yes.
It can be hard to let go of.
Very hard to let
Right?
go of.
Because you
but-
went from cradle to where it is today.
It's very hard to let go. Most of these owners are motivated to sell. And if
Okay.
they're not motivated to sell, then the process isn't going to work.
And you
we
can
stop
smell that out.
Right off the bat. Right off the bat. Right off the bat.
You can smell it out, right?
Yes.
Yeah.
With larger companies who are not quite sure, and they've got different reasons.
So what's the size of a larger company?
Larger company would probably do, let's call it 5 EBITDA up to maybe 20
Okay.
EBITDA. That's a Canadian market. So we're
And that's where you cap off, 20 million?
probably about 20, although we've worked on transactions that are larger.
Okay.
But how many $20 million Canadian companies are, and more
It's true.
importantly,
It's true.
at that level, the comfort is to work with the big accounting firms. Hey, you know what my competitors are? Everybody. The banks. RBC have a mid-market group.
They do actually, you're right.
Yeah,
I found out. today.
Very good guy. Bank of Montreal. I actually got him the job years ago through a headhunter. He runs all the bank. So a lot of the bank clients automatically migrate to the M&A group within their own bank. However, those that don't work out, because you know what? The banks ask for these big retainers to do the book. So hard-nosed entrepreneur, hard-nosed business owner, he doesn't want to pay this big fee with no performance. I will work at next very, very low just to pay the analyst. I'm not looking for anything. I want the mandate. I want the sale if it's for real. So we prepare all the documentation. We're involved from beginning to end.
So
Cradle to grave.
I want to take a step back here. So in my previous videos, I've talked about what people should do when they start their business, but more from an accounting and tax perspective.
Exactly.
So what I want to ask you, as someone who has seen more businesses than I'll probably ever see in my life, is for a new entrepreneur who's in their 20s and 30s
Yes.
coming out there, what advice would you give them?
Advice I would give them, and I'll give them very good advice. All right, so you are growing, you're expanding, everyone's short on capital.
They're starting a business, right?
They're starting a business, they're short on capital.
Short on capital.
So they reach out to me and they say, look, I want to raise capital. I said, well, wait a minute, I don't raise capital, but I have an owner who sold his business. He's 68. He's played golf for a year, and now he's bored. But man, he built a great business, and he's a smart cookie. Let's bring him in and buy 10 or 15% of your business and help you. He'll help you fund. He'll help you grow. Now you've taken on a partner. You've taken on a shareholder, not a partner. And I've got hundreds of people who are looking for a project that have sold a business, or people who've left a profession. Some of the smartest people I know are ex-bankers who've got some money, who'd like to participate in one of these companies. They make good shareholders.
But then wouldn't a 28-year-old be intimidated by, someone at such a senior level coming in and the fear of them cannibalizing the business? Like, what does that come into play?
For many of them, some of them you're going to hear, this is very common. I own the business. I own 100%. Okay,
Right.
see you. Have a nice day. I can't work with them. But listen, if they've started their own business and they've left corporate life, they're tough enough. So I'm going to match them with someone who has similar values, similar objectives, and a bit of a marriage.
I'm so fascinated because I honestly thought you would give me a cookie cutter answer like work hard, be a good listener.
No,
you know
no,
what I
no.
mean? But your answer was so not what I expected.
No, because look, all that other advice they get from textbooks and consultants and YouTube. I mean, I am involved in, I can sit in somebody's early stage business and smell things and smoke things out very quickly.
So your advice is find a retired executive or a senior executive who is willing to invest in your business, a small portion of investment, and then make that person your mentor.
A mentor for a long period of time. And I'll tell you, these arrangements, they'll bring in capital, they'll bring in expertise. If it's Harry's got a wide network of contacts because we're going to match him up with a company that is something of interest to him and probably something that he's connected to.
And that's part of your product offering?
Absolutely. I mean, we don't do it very often because these early stage guys say, I only want the money. I don't want to bring in another shareholder. I've got a shareholder. My wife's a shareholder. So you say, okay, carry on. I'll refer you to people that try to raise capital for companies. I don't do it.
And then you can have a contract saying after 5 years, 7 years, you exit at X amount or whatever.
Absolutely. I mean, the owner's 68. He wants to have some experience. He wants to have some fun. This is fun for him. I mean, some of these guys get so involved. You wouldn't believe it. I mean, he's come out of retirement. He's played golf for a year, so he'll come in 2, 3, 4, 5 days a week. He will make this young entrepreneur a better entrepreneur. Not always.
Right.
Conflict comes up in many occasions.
Egos must come into play, right?
A lot of egos.
Yeah.
But remember,
like you said,
yeah. Well, I mean, for those guys, I can't help them.
Right.
But for people who are looking for capital, looking for a mentor, and these are people, I mean, I got a large number of companies that I've sold and a large number of people out there that I've met. Executives, former executive. Man, I know a lot of ex-chairmen, ex-CEOs that have early retired, and they have money. And they invest, not a lot, but they're now shareholders, maybe 10, maybe 15%, maybe more. They've now gotten involved. Believe me, those are the businesses that are climbing and growing. But I spend an incredulous amount of time networking. This is a fact that has been audited.
Question for you. Sorry,
Yes,
on this
go
topic.
ahead.
It slipped my mind. I was thinking about it. I was driving here. How does someone become a good networker? And let me tell you why I asked the question. When I go to networking events, people are shoving their business down everyone's throat.
Yes.
Without even asking, what's your name?
Exactly.
Right?
Exactly.
So to all these young people, or even people who just don't know how to network, please teach us.
Let me teach you how to network. I network. I have 60,000 contacts of decision makers. I gave out 4,000 business cards last year. I will go to an event, and I'm being very selective. A lot of these events are just service providers that don't have any. So you meet a recruiter, you'll meet wealth managers, real estate agents, real estate brokers. I'm looking for company owners to connect with.
And where do you meet them?
Everywhere. I met a guy standing in line at a Walmart.
Because I meet the real estate guys. I meet, the financial planners.
Well, you know who? The banks, the private equity firms, the accounting firms, the law firms invite their clients. And when they invite business owners, I'm invited usually by all the big law firms. So I meet owners and they're going to see their lawyer, they're going to see their accountant. So I will network. I will go to all kinds of events. And here's how I do it. And it's almost embarrassing. Somebody said, Mark, you're a clown. Well, you know what? It works.
It works.
So people will go to a networking event and meet somebody they know, and they'll stay there all evening talking to one person. They went to a networking event, didn't meet anybody. Somebody might have joined that discussion. You know what I do? So I will take a pocket full of business cards and I will walk over to a group of 3 people in the discussion and I interrupt and say, I want to meet somebody important. You guys look important. You know what happens? Ha, 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 ha. He's more important than I am. I then say, what do you gentlemen do? Everybody introduces themselves. They tell me what they do. It may take 10, 15 minutes. Everybody introduces himself. I tell them that I do mergers and acquisitions and I'm looking for my next deal. I'm looking for company owners. Do you know anyone? Out comes the card. I always have cards. Always. I wrote an article for LinkedIn said, if you don't bring a business card, keep walking. I mean, this new generation says, I don't have a business card. Well, then,
don't get me started.
Don't get me started. So connect with me on LinkedIn. Connect with me on the phone. Or some will say, well, here's my card. When you're ready, let me know.
I have 2,000 people on my LinkedIn account. Tomorrow morning, I won't remember your name. You're just one name now in my LinkedIn database.
Well, that's unfortunate.
Right?
That's unfortunate.
You lose
it. But for anybody that's connected with me, I look at their LinkedIn page, I do some homework, and of course, I will reach out. I'm a salesman. I'm looking for my next deal. I've just said at the beginning, there's a shortage of deals. I've got a lot of competition. Harry, prior to me, interviewed 3 or 4 other brokers. Maybe 2, maybe none. However, there's a lot of people claiming to do what I do. I'll tell you, there's a lot of amateurs in the business, and many of these companies will tell you that they've been fleeced or worked with somebody that has not represented them well. I follow through. For me, follow-up is everything. Anybody who's involved with me that doesn't follow up doesn't last. It's all about, we initiate the follow-up. Harry's busy. Follow-up, follow-up, follow-up. Keep the file moving forward.
Let's switch gears here. What does Mark do for fun? Because it seems like you're either networking or you're working. Like,
okay, so
what else do you do, man?
So listen,
who's Mark?
I've generated my deal flow over the past 37 years by writing articles. I've been published over 1,000 times. And you know where I publish? It doesn't work as well as it used to. The trade magazines. I had a column in Canadian Electronics for 27 years before they sold the publication for the 3rd time and amalgamated it. Canadian Metalworking, Canadian Transportation Magazine. LinkedIn doesn't really work. Who reads the trade magazines? People in the business.
Are people still reading?
Of course. Company owners do. Well, look, their industry publication comes out once a month. All the new product, they read it. They read it. That they read. They may not read the Globe and Mail or Financial Post or Toronto Star, but they read their trade publication. Hard to get published. You know why? Because I've spoken at about 34, 35 conferences. I tell people how to network. I tell people to write articles. I tell people to get on radio. So I've been on the Brian Crombie radio show 4 times. The most recent one I was on with Jeff McCain of McCain Foods, grandson of, one of the founders. He acquired a business in December, the HVAC business. So I've told people that. So there's a lot of people writing articles. It's hard to get published. However, 30 years ago, they were begging for articles. 35 years ago, they were saying, submit an article. They'd publish anything. I would have one article I'd write and have it published in 11 different magazines. I just changed food processing to electronics, but I'd be giving generic advice.
Right.
Buy a business, sell a business, private equity, start a business, be an entrepreneur, plus some political stuff in between. So that used to work. Everyone is asking now what works today. Referrals, not so much. Guess what? Everybody's my competitor. So without naming a lawyer in mind, lawyer told me that he had this client and it was a 3rd-generation business, and the patriarch of the business is in her 90s, and as soon as she passes away, the kids are going to sell the business. Okay, I'm been waiting for 3 years for mom to die. And all of a sudden, the lawyer says, well, law's pretty slow. What? Okay, I know law's pretty good. He said, I'm going to give it a shot. What? Lawyers brokering a business? Wow. Going on. Accountants do it, and I've always done it. But for the most part, there are a lot of people looking for these private businesses.
I wouldn't do it unless I had a CBB with me or someone like you with me. I wouldn't. I'd be too scared. Because what you don't want to do is misvalue or,
Yes. Remember, I give them the opportunity and encourage them. Get a second opinion.
Because industries have different multiples.
Of course.
Right? And without that experience...
But I do my homework. I have the handbook. I've done so many different valuations. I go back to the handbook. I reach out to people in valuation. I'll bring them a file once in a while. They'll give me free advice. I will know exactly where this business fits.
Yeah. I wouldn't do it without you on my side.
Well, this is what I do. You are an accountant. You're doing coaching. That's your field. My field is to make sure I understand the value of the business and all the circumstances.
And not just that. I mean, you've also got the experience on the emotional side of the buy and sell.
Absolutely.
Right?
You get to know them
conflict resolution and all that type of stuff.
All kinds of things. You've got to get to know your client and get to know their personality. You get into their home. You get very invasive. I know all their circumstance. Many people open right up and say, this is what I own. This is the circumstance. My son's retarded. He's not capable of, being in the business. All the issues. Drinks too much, smokes too much, has no hobbies. So my hobby, I love to read and write. And I love to garden with my wife. Not as much in recent years, but, and I don't vacation. You know what?
You don't vacation?
No, let me be honest. Okay, nobody knows this. I haven't had a vacation in 30 years. We went to Florida with the kids. You know where my vacations are? Conferences.
Are you serious?
Can bring your wife. 3-day conference.
And it's a business expense.
It's a business expense. 3 days in San Diego. 3 days in San Diego.
In a suit.
In a suit. That's why, hey.
Your wife's at the beach.
My wife's at the beach, or she's with all the other wives that have come to the conference. If she goes... And it's fun. And all these conferences are generally in great places. San Diego's got to be the best. And I was the chapter president of the organization that link our community, the private equity, M&A, the lawyers, everybody that does deals, called the Association for Corporate Growth. It's been around for 52 years, chapters all across North America, large membership. And so I was chapter president a number of years ago for 5 years. We'd have a speaker every month. A prominent speaker, 120, 130 people for dinner, big networking event. Back then, it was all M&A private equity people. I've gone to some of these events today, and that's where you meet the wealth manager, the real estate broker, the recruiter. Very few people seem to want to network. I go to everything that is relevant. So I think I told you, in the old days, I do 3 events in a day. There was a breakfast meeting at a law firm. There was a lunch with the Bank of Montreal. And there was a cocktail party with a private equity that invited you. A whole day of event. I like the cocktail parties.
I find it so draining. I don't know how you do 3.
Well,
it's so draining.
You don't do 3 every day.
Yeah. But just the fact of even doing 3.
I've done it.
Yeah,
Remember, 4,000 business cards. I will go to many trade shows, and there's a trade show every single day. They're tabled.
And how do you know where they're happening?
That's all listed. I mean, I got the list of every trade show, every exposition, and I pick and choose.
And where do you get this list from?
Oh, it's on the internet. Trade shows in Toronto, trade shows in Canada.
So go to Google.
You go to Google, trade shows in Canada. Trade show and expositions. You got to search a little. So I go to the bigger shows. Again, I take a junior accountant or I take a ninja with me, a junior lawyer, and I go on President's Day. Usually executive day when they have the executive in the trade show booth. I don't solicit because you're not allowed to. So I will walk in, look for the senior guy, and if I don't find the senior, so I start off by introducing, this is so-and-so, he's a young lawyer, and they look and say, oh, a young lawyer. I'm Mark Borkowski, Mercantile Mergers and Acquisitions, currently looking. I either have a client looking or some interest. We strike up a conversation, and I pass out my business cards.
Can I impose on you and ask you to invite me?
You're coming. You're coming to the next show.
Which one?
Whatever one's coming up.
This is now being recorded, so
okay.
it's etched in stone.
All right, so I haven't looked at what's on tap next. Next week, I'm unfortunately booked, and I don't see these shows, but there'll be the spring and summer is when most of these shows.
March and April is a write-off for me. It's
okay, so I know. So then in May,
June, I'm all yours.
June, come on out. You'll be the ninja. We walk the show, but listen. From 9 o'clock to 5 o'clock, when I've worked the shows by myself, or even with a young ninja, a student, for example, or a young lawyer, accountant, we sit in the car. We can't drive. It's exhausting.
It is exhausting.
It's exhausting.
That's what I'm saying. It's mentally draining.
We've handed out 500 business cards, had so many conversations, and by the way, I'm a salesman, so if the senior executive's not there, and I've come to the booth, and everyone's interested, is an M&A guy in the booth. Now, one of the guys selling us couplings, I'll say, tell you what, I'm looking for company sellers. You have clients that you're selling to, yeah? Tell you what, here's my card. Reciprocity will be respected. If you introduce me to a qualified seller, I'll give you a finder's fee. Bam! So after the show, 500 cards have gone out. I sit back. I've got a bunch of cards. I follow up. I send everybody, thank you. Good to meet you at the show. It's a lot of work. I have an assistant doing that. Out they go. All of a sudden, you get a float call. I got a client who manufactures hydraulics. He's based in Woodstock, Ontario. I've been calling on him for years. I take him to a baseball game every year. Joe said he's thinking about selling. Okay, let's go to a meeting. Because he's gone to Joe, and Joe said, look, I don't want you to tell anybody, but introduce me to this guy. So we go to breakfast, and that guy gets an agreement that he's going to get a finder's fee if we close a deal. From there, unless the owner's pretty comfortable with keeping him appraised, remember, he's made an introduction. He's heard a brief introduction over a breakfast, a lunch, a dinner, a coffee, a cocktail. Or he simply said, hey, I'm just going to introduce you through an email, an introduction. Take it from here. He gets a finder's fee, guaranteed. He gets whatever I get when I get it. Off we go. Referrals, very important from a networking perspective, because there's no other way to get it. Articles used to work. Going to trade shows used to work. Today, referrals are probably the greatest opportunity, but not the only one. You've got to get out there. 4,000 business cards last year.
Can we switch gears? Because you said a few minutes ago that sometimes you put your political opinions in your article. Do you still talk a bit of politics, or is that off the record?
It's of course I talk politics. I mean, if you follow me on LinkedIn, you'll see that I'm pretty outspoken. I mean, I'm pro-business. I am pro-business, and I support all business initiatives. So pro-business people, for the most part, tend to be conservative, not always. Pro-business. And, of course, I am very not impressed and supportive of unions. Union companies are very difficult to sell. You're dealing with a different cat.
Canada Post is bankrupt because
well, that's exactly correct. The unions have strangled them.
Yeah.
So, I will speak out, obviously, about that. I'm not very pleased or happy or
Air Canada, same thing.
Air Canada's in big trouble.
Right.
Of course, I'm not a fan of, Mr. Trudeau. We're happy he's going. No, I don't know anybody. I don't know anybody left. But there are some. But, working where a lot of the union influence is involved is something that is stymied Canadian business.
Now, we all know that Pierre Poilievre is coming to power. It's not.
It's a given. It's a given. It's when the election comes.
Now, if you were his advisor, how should he navigate? Because I've given my opinion in my previous video. How do you think he should navigate around this tariff issue? What would you do if you were the advisor?
Okay, so listen. If you've seen LinkedIn, and I got actually a bit of an insulting email.
And sorry, and just a follow-up question: is this tariff threat impacting the buying and selling market?
Oh, it will. I mean, I'm without sleep here today because all of yesterday and these past couple of weeks have been taking calls from people in the aluminum business, the steel business, the pharmaceutical business, milk, all these industries, and people that I know who I may not be selling their business, but I've made a connection with them, are calling saying, what do we do?
Are they doing panic sales? That was
panic. Well, they're not selling, they're waiting. So I have given this advice to Doug Ford. I've given this advice to Pierre Poilievre. I've sent postings. I've sent letters. I've written letters to the editor that have been published. Doug Ford's been to Washington twice. I think he's going a third time. Guess what? Nobody's met Trump. What's the point of going to Washington and addressing a Canadian bunch of business people?
JD Vance hasn't even met them.
Exactly. So you haven't even met the vice president.
It's a vacation.
It's a vacation. So, or an election ploy to, kind of raises visibility. If you don't meet the top guy that makes the decision, what's the point? Some Canadian prominent individual has got to meet Donald Trump. Now, of course, Danielle Smith and what's his name?
Well, Kevin O'Leary did.
But it was a very short meeting. It was cordial.
But he spends more time in the U.S.
Correct. But he's not the spokesperson for Canada. We need, if it's Doug Ford, Ontario, biggest trading partner, go down, go to Mar-a-Lago, go to Washington, sit with Trump for half an hour, put the case forward. Nobody's done it. And until they do it...
Well, Trudeau's gone twice, no?
He's gone twice, but
Listen,
Mr. Trump doesn't respect Trudeau. I mean, he's made that public.
He's a governor.
He was a governor of the 51st state. So it has to be a business guy. And Doug Ford's a business guy. It's got to be somebody who's got a business connection. Flavio Volpe, who kind of insulted me when I said, hey, have you been to see Trump? He writes back to me, are you okay? Like, am I losing my mind? If you don't meet the king, that's how he's described himself this week. If you don't meet the king and sit with him and negotiate, nothing's going to happen. Tariffs are coming. Let's go. Listen, I spent time with Donald Trump. I spent 4.5 hours, just me and him in a limo, when he came to Toronto looking to buy a large property management business. I can't go into any more detail. And we spent...
Is that the hotel that he bought a few years ago?
That was after. But he came down to buy a big portfolio of property management. Property management is a business. So he came, he made his proposal. The two principals of the company said, hey, Mark, you tell him it's a little low. We're going to open the back door. I came and said, well, Mr. Trump, you're going to have to sharpen your pencil. He said, where's your office? I said, downtown. He said, well, most of these buildings are downtown. You're with me. So we got in a limo and we're driving. I can tell you, this guy's very entertaining. We had to stop at a Tim Hortons because I was laughing so loud that I was going to, had to go to the washroom. And of course, being a very cordial guy, and he's funny. And of course, what does he talk about? You know what he talks about. Ladies. Where do I meet the you're sitting there with this hilarious guy.
This is gold.
So he says, what would you like to drink? Because there's always like a bar. So I open it up and there's beer and this pop. So I take out 2 beers and I say, Mr. Trump, here's a beer. He says to me, I don't drink. And then he tells the story
about
his brother, the alcoholic. So long story short, I mean, we really hit it off. So he finally drops me off at the office after like 5 hours of going around, looking at all the buildings, taking pictures, opening the window, whistling at women. This was 19 years ago. No, more than 19. So here he comes up. Just as we're getting out of the limo, he says, what's your home address? Writes the home address down, home phone number. And since I had his book, The Art of the Deal, he signed the book. I got the book signed, The Art of the Deal. We talked about, everything, all his advice. So that was in November. First week of December, I get a Christmas card. The Trump Organization. I got every year that I was involved with him, I got Christmas cards.
Wow.
So somebody said, you know what? Keep those Christmas cards and go down to Pawn Stars in Las Vegas and sell them. I said, well, they'll be worth more when he's dead. Yeah. Like Ronald Reagan memorabilia is very expensive and it's very collectible.
Right.
So I've got this whole collection in the envelopes, 3 wives, dogs, kids, and I've got a private email for him. Hasn't responded, in this administration, but he did once in his previous administration. Probably an assistant that wrote back.
Of course.
The
intern. Yeah.
The intern or whoever his assistant. But I think he'd remember me if I got down to.
These guys don't forget. You don't
meets a lot of people. Yeah,
exactly.
But we had a great conversation, and he knew what he was coming up here to buy. And at the end of the day, it was a low-ball offer, so the group that had the property management business ended up selling it to a Dutch company that took over all these contracts and whatnot. But he was fun to be with.
I can imagine.
Fun to be with.
Listen, I'd love to interview him.
He'd be fun.
It'd be a dream interview.
Yeah, it'd be. But many have, and many have been very disappointed because he's very direct. So that was my experience, and.
But I guess just to round off the second part of the question is, how do you think this tariffs will impact the landscape of buying and selling in Canada?
It'll devastate everything. It'll devastate everything
prediction?
Because, if these potential company sellers are being impacted with a tariff, most of these buyers that come out of the U.S. will obviously look very, very unfavorably at that. So it'll impact everything.
And how I look at it was the interest rates coming down, prices going up, you're hitting inflation again. So there's all those impacts. However, Harry wants to sell the business because Harry's not well. So we've got to find a transaction. He may have to adjust his expectations. Do you think the solution might be to just kind of how Trump says MAGA, right? Make in America. Do you have to make in Canada? Like have these industries in Canada now?
These industries, look, we're buying Canadian. We're not going to
really buying Canadian?
I mean, we're buying Canadian. It's the last 3-4 weeks has been let's buy Canadian. Look, the Americans need our aluminum. The Americans need Quebec's electricity. The Americans need our pharma. The Americans need our steel.
But then why do we appear more scared than they are?
Because they're imposing the tariff on us. Now we can impose tariffs on them, which will be.
But we're not, though.
Well, we might.
We might.
And we don't need to. Somebody's got to go down and say, look, Donald, you've heard. Everybody's been on CNN and Fox. Doug's been on Fox, 3 times? All the ministers have been on CNN from the NDP. Jagmeet Singh was on the CNN. He did a great job, actually, with CNN.
Left. I'm sure they're
yeah. But you know what? Of course, he said, get rid of your Teslas. So of course there's a campaign going around to get rid of your Teslas.
Jack said that.
Oh yeah.
But he's like green energy and all that stuff.
Oh no, but get rid of the Tesla. Get rid of Elon Musk at all costs. So he made quite a convincing presentation. But there's been about 15 or 20 politicians and business people on CNN, on Fox, on the other stations, but to no avail. Until you meet the king and sit with the king, nothing's going to happen. So if there's anybody listening here of any politico, any senior person, within the next little while, you better get down to Mar-a-Lago or you better get to Washington and you better get an hour or half an hour with Don.
I mean, the way how I look at it is, imagine if Benjamin Netanyahu, Putin, Jinping, Modi, if these guys or Trump were the leaders of Canada and someone had threatened Canada, their response would have been, I'll put twice as much tariffs, right? That would have been the
absolutely.
next tweet, right?
Yes.
But we haven't done that.
Well,
ours has been very...
Because, our administration...
Insecure. It's been very insecure.
We're very insecure. The administration is still being led by a guy who's inept, who has no business background, a former kindergarten teacher, Mr. Trudeau. No major action's been taken. The provincial... premiers have come up with strategies and ideas.
Well, Alberta's been very active.
She's been active. She's stepped up. Doug Ford has stepped up, but we don't see any. Everyone's waiting for March the 4th or April. Get to Washington. Get to Mar-a-Lago. Play golf.
Last question on this topic.
Yes.
Do you feel this could be ammunition for Quebec and Alberta to separate?
Very possibly. Listen, this is a rumor. It's been overheard a couple of times by people who've reached out to me. When Donald Trump said, let's make Canada the 51st state, side breath, open, not hot mic as they call it, everybody except Quebec. He don't like people that speak French.
That's right. Interesting time.
It's difficult. I mean, so that's kind of a reality. So Quebec better be afraid. Aluminum is the second largest manufacturing product that Quebec produces. That's an aluminum powerhouse worldwide. If he opposes a tariff on aluminum, we're in trouble. Quebec's in trouble. The automotive, this past week, going to be a tariff on cars. What have all the unions, what have all the Ford Canada presidents said? It'll be devastating. We'll be closed within 2 weeks.
They're going to shift their plants elsewhere.
Correct.
Right.
They'll have to shift their plants to the U.S. This will become a banana republic. We can't have tariffs. We need open trade. We've had open trade. So get down and see the king. Go down and negotiate with him. Someone's got to go.
Yeah, it's funny you said we need it, but not they need it.
Well, they need it as well. I mean, number of the governors in Michigan. Look, the most convincing one that I heard, which was funny, was the governor of Kentucky, who's a Democrat, who literally appealed on CNN saying, our, what do they call it? What's not whiskey, sour...
Gin?
Bourbon.
Bourbon, yes.
So we are the largest customer. The LCBO alone, the largest customer of Kentucky bourbon worldwide. He said basically if suddenly they imposed a tariff on us, which has been threatened, it would wipe out Kentucky's economy just like Quebec's aluminum economy. A lot of booze made in Kentucky. A lot of booze.
I can imagine.
So people drink sour mash whiskey here. Maybe it's because, they like the thought of having an American bottle of booze on their table. But that's the reality right now. A number of the automotive states are going to be devastated. Michigan, Ohio, Pennsylvania. I mean, it's just a disaster.
Yeah.
And I know that Donald Trump in his gut must know that this is going to create chaos. Let's go talk to him.
Yeah. Listen, Mr. Mark Borkowski, it's been a pleasure.
My pleasure, Manu. Thank you for inviting me.
I'd like to do this again.
Let's do it again.
And next time, I want to talk about some stories, some
I got
past
lots.
deals.
I got lots.
Just share some stories.
I've got lots of stories, and they're very, very, very colorful. Some are, and you know what? Who buys businesses? Who sells businesses? Big, big, big entrepreneurs. And I've got to meet many of the top 500 CEOs in Canada. I think I've got personal relationship or connection with at least 300 bank presidents. I mean, who's in the fray? People of influence. So I get in there. And plus, if I don't get in there, I make myself get in there. Sell, 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 or we'll boot you out in the street. That was the advice given to me at Hewlett Packard. Sell, 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 or we'll boot you out in the street. So you go and sell. I'm looking for my next deal. Bring me a deal.
Guys, I said to you at the very beginning, he's a man that I cannot introduce. The experience, the wisdom, the knowledge, you just can't summarize it in a minute, and the proof is in the pudding. Hopefully you enjoyed it as much as I do. He has promised a second episode. I will hold him to it, so stay tuned.
I'll be here.
And remember, guys, it all starts with a simple conversation.